Look at the flick of their wrist. 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 I woke up feeling like I was on the moon.
For this week's Teaching Thursday, we're going to touch on a topic that's heavily talked about, but many people might not know what it is, even though they might be familiar with the term valuation. Well, another term is going to be market cap or market capitalization. Now, what is a market cap? A market cap is simply a company's stock price multiplied by the number of shares outstanding. So if a company's stock price is $10 and they have 1,000 shares outstanding, then their market cap is going to be $10,000. Now, where can you find the market cap? The market cap is going to be listed on in the several brokerage firms that are out there, as well as your search engines like a Yahoo Finance. You can simply just look for the term market cap, and it'll be listed there. A lot of companies. So we have their market cap, which is 80 billion. That makes it a large cap stock. Anything over 10 billion is pretty much considered a large cap stock. Their average. A lot of companies, their market cap is going to be divided up. So how is the market cap even divided up? Well, there's different ranges. Usually they say small cap stocks or small market capitalization stocks are about under $2 billion, while mid cap stocks or mid capitalization stocks are going to be between 2 and 10 billion, and the large capitalization stocks are going to be 10 billion or more. Now, some people say that this number varies, but that seems to be the general consensus. And you're going to have different stock indices that measure different stocks market cap. So the Russell 2000 is actually just a whole bunch of small market cap companies or stocks that are under $2 billion. So who even benefits from the market cap? Well, pretty much all the investors, because what you invest in the company decides the stock's share price, which is what's going to decide the company's market cap. So if you're invested in a company, then you are benefiting from the market cap. And the higher the market cap, depending upon the number of shares, the higher the stock price is going to go. So as long as the number of shares remains constant and the market cap increases, that means that the share price has increased. Now, when does the market cap change? Well, that goes back with what we just said, in that the shares change based on what investors think that the stock is worth. So if a stock is worth, earlier we mentioned about the stock being worth $10 a share with 1,000 shares, so the market cap was $10,000. Well, if that share price goes up to $20 a share and it's still 1,000 shares, well, now the market cap is $20,000. And that can happen every second. Every day the stock's price changes from Monday through Friday through regular hours. So whenever that stock price changes, the market cap is constantly changing. Now, when you have some more stable companies like financial institutions and real estate, their market cap tends to stay relatively the same. But when you have some of these companies like technology or energy companies that are fairly reactive to certain outside medium or economic indicators, their market cap is constantly fluctuating by large amounts on a daily basis. So lastly, why is a market cap even important? Well, market cap is important because it just decides the valuation of a company, how much they're worth. That's going to decide in terms of what their assets and anything that they have of value. So the higher the market cap, it's considered like big business for a company. So a lot of these technology companies tend to have large market caps, as we explained in the Throwback Thursday where we had the video on technology sector. In this week of Black Market TV, we're going to talk about the technology sector. A lot of these technology companies tend to have large market caps because investors are putting more and more money into them for innovation and to make new products. But then when you have companies that may not have as large of market caps, like some of these, let's say if it's a mom and pop and they decide to go on the stock market, like GoDaddy just had their IPO and, they priced at, however $1 million. So their market cap wasn't as large as maybe a Facebook or Apple. So that's going to decide where they fall into play. But market cap is just, it's just a fundamental piece of data just to kind of help you realize like, how much is this company worth? So if you see a company's market cap, you can simply divide the number of shares and that'll tell you how many shares are outstanding. And then you can actually look to see how many shares you own compared to how many shares the stock actually even has. That concludes this week's Teaching Thursday's topic of market cap. Market cap, of course, is just basically a stock's price multiplied by the number of outstanding shares. Market cap is just a term that's constantly thrown out there. However, you might hear the term valuation. So you might hear that Snapchat has a valuation of $15 billion. Well, in essence, it has a $15 billion market cap. However, market cap is just mostly associated with stocks that are actually in the stock market because it's related to the share price and the number of outstanding shares. So just stay tuned for more content here at Black Market Exchange. We're going to continue to give you what you need, and stay tuned. Check out that Brent Money and Life podcast. Please, that podcast is so vital. We're trying to turn people from consumers into investors, and that will dictate what kind of consumer that they can be.